joined by Rakesh Verma, co-founder and chairman managing director at MapMyIndia. Rakesh, hi, good morning. This is Harsh here. So let me start off by understanding from you what outlook is, especially with regard to the partnership with Hyundai. What does this bring to you, and how many users will get onboarded as a result of this? What happens to ARPU? Give us a sense of all of that to start this conversation off.
Thank you for calling me on your show.
So pleasure is ours.
Let me try to answer your question in a manner that it will be easier for you to understand and the viewers too, and Hyundai being one of the cases. Fundamentally, what has happened over the last 2 months and the impact of that is quite good and serious for the future business. And that is our flagship product, Mappls app, which has now over 40 million users. And this momentum which we have gained on that has along with the much improved our platform, getting the attention of lot of customers who were not our customers in the past to use the Mappls platform, leading to increased SaaS business. Now, this particular event that is happening in MapMyIndia is going to have a very good and very interesting and very profitable margin business in the times to come. Coming to Hyundai, of course, Hyundai is our customer, and both Hyundai and Kia, and we are reaping the benefits of their loading the maps in their car.
What does this do, sir, to your top line? Where does growth go? Give us a sense of what it does to your ARPU, your margins. Therefore, is there some fresh capex which is required to ensure that this JV comes through in terms of product, and how much will that be?
Okay. We have already stated to the investors in our investor presentation that FY28 will attain 1,000 crore revenue. This year's revenue, ARPU you call it, or growth you call it, we are expecting it at a 20% plus revenue growth. As far as the EBITDA margin is concerned, we are expecting anything above 35% for this year.
But that, sir, is lower than what you've traditionally done. You've always done above 35. You've done 40% plus in most years, maybe till a couple of years back. Does it revert back towards those 40% levels or not quite?
Yeah. There are some lumpiness always, quarter by quarter, so definitely there's a lot of lumpiness. So what I'm talking about is on a year-on-year growth. Now, 20% to plus, what I'm talking about is for this year. But we have gotten some very interesting contracts which will start delivering from next financial year. One of them you might have seen, IOCL, which is 100 crore IoT business, which will be delivered over the next 4 years. Similarly, we got from Survey of India. Now, these are very long-term businesses where we can gain the revenue growth from. I would say these were not so much traditional. The traditional business was in the map side, which we are clocking at for 20% growth in any case.
And the couple of deals that you mentioned are more on the PSU side of things. Talk to us about recoveries coming in from government or such contracts. I've started to see that your receivable number has crept up and now sits at nearly 20% of your total assets. Is that the trajectory that it will continue to trend at? Because just trying to gauge that, because if it's regular course of business, then that's something the investor should pencil in.
Well, I don't know what was the basis for your calculating 20%, but in any case, I'm not questioning that. Yes, these, recovery from PSU or government is close to almost 100% as far as MapMyIndia is concerned. If we really wanted to grow the business without worrying about the recovery, the growth could be much larger. We are very careful that we will work only on our platform and products and not be a service company. Hence, I don't think investors should at all worry about our collection part. Yes, the account receivables that we are talking about, the typical cycle of a receivable from a government customer is 90 to 120 days. MapMyIndia, and that's the working capital that we are deploying. And we are not, since it's all recoverable, we don't have to worry about it.
Point taken, sir. Sir, you've close to bottomed in terms of margins. I get your point. In terms of growth, you're guiding for 20% FY26. What's the visibility like going ahead into FY27, 28? And also want to keep in mind that there will be competition, right? So how is competition shaping up? How is pricing shaping up? And how should therefore growth shape up for you?
Well, in the past, we had the competition of GMAPs. I think we are doing pretty well there now.
Yes.
Okay. Consumers are supporting us. B2B customers are supporting. We are making good entry into the quick commerce mobility part of the businesses. The new competition that keeps talking about maps, I have seen it in last 20 years. They have come and gone from that business at least. So they will come. It may impact or may have some impact on the price. It will appear like that, but it doesn't sustain like that. I think high quality product, high quality platform, high quality service is what the customers look for.
So 1,000 crore in terms of top line by FY28, reasonably confident of clocking that?
Yes, we are still confident about it.
Got it. Talk to us about the railways MOU. What's the size like, and what's the opportunity going to look like? And any capex required from your end for that?
You know, MOUs never talk about value amount.
Sure.
A contract talks about an amount. MOU is a concept that railways would be like to work with us closely. And the first impact has happened in case of, which is railways only DMRC, the Delhi Metro Rail Corporation. So like that, we are moving ahead. And when it comes to railways and defense, you know, it takes time to make an entry and get the business out of them. Defense, we have already started getting business. We are happy about it. Payments are coming in. So there's nothing to worry. Railways, it just happened few months back. And as the time progresses, we will move forward with good business opportunities. Coming to I think you asked about railways, something, CAPEX. See, MapMyIndia's CAPEX is of two kinds. One is building the intellectual property, which you see in our financials, if you see intangible assets, which is all related to our product and platform, the soft stuff. And that's where the operating leverage kicks in. The other CAPEX could be in terms of if we acquire some company or if you make investment in some company. That we are very careful about, that we do it only on a very case-to-case basis. So large CAPEX or majority of the CAPEX that we are deploying is principally into building our future IP, which includes use of AI, because it is we have been using AI for the last 4 or 5 years, but we have accelerated the pace because more technology in the AI is now available, which will help us in building the maps, which will help us in deploying the maps.
And therefore, sir, it gives you better capability to tap into projects which you earlier couldn't take up. Does that give you even better visibility in terms of revenue conversion going forward?
Yes, you're absolutely right. It does. It is helping.
Sure. And if you can just give us an example of what are those capabilities and what is the kind of clientele that you will tap into if those capabilities come through?
You know, a couple of simple things I can explain, and the things that you can understand or the viewers can understand very easily. One of the pain points our consumers or the B2B customers had was that our ETA, estimated time of arrival, was not as good as the competition. Now, using some of this technology I was just talking about, we have absolutely now become at par, or in certain cases better also. It's now for the users to use it and find it out for themselves with the ground reality. Second is related to how do you use the search mechanism to find a place. Like that, AI is playing a role in all of them in estimating the future deliveries. Tomorrow, what will happen based on the past data? AI is helping us in also predicting that, because a lot of customers have to deliver goods tomorrow, day after tomorrow, and they have to plan the movement of the goods like that, or even the mobility customers.
Interesting. Very, very interesting. Thank you so much, Mr. Verma. In fact, that's all the time we have on the show today. So we're going to have to let you go. But that conversation was very interesting.